The stock market has reached the all-time high with the market exuberance around the AI stocks. The Magnificent 7 stocks keep going up in a straight line against the negative market breadth, where most stocks are still negative year over year. So the question is, are the AI stocks in a bubble just like during the 2000 dot-com bubble? In this video, we're going to compare and contrast between today's AI narratives and the dot-com bubble and try to predict where a crash in this sector is inevitable. And before we go any further, if you can please hit that like button and subscribe, it will help me out greatly with my new channel. First, before I talk about the similarity with the dot-com bubble, let me just provide a quick background of the recent AI rally. AI stocks have been rallying impressively since the stock market bottomed in October 2022. Market participants since then decided that the AI is the new buzzword, along with the narrative that the Federal Reserve will soon cut rates. And it has sent a lot of AI beneficiary tech names to the moon. Most of the previous FANG stocks are all of a sudden AI stocks. All the tech companies are now peddling this AI narratives, and investors are blindly pouring in with hopes of future innovation. Now, getting back to my similarity comparison with the dot-com bubble, here's the first similarity: irrational exuberance. The exuberance around the AI sounds a lot like the dot-com bubble, where the promise of e-commerce poured in a massive amount of investors looking far ahead in the future. This cost-reducing future business model in both cases have created a lot of excitement among investors and was soon followed by lots of greed. We're not just overbidding on big tech names now, but also microcap and penny stocks have been rallying too, as long as they are somehow related to AI. This similar market exuberance was recently also observed in things like metaverse, NFT, meme stocks, and altcoins. AI could just be the next buzzword. Here's similarity number 2. Aimless spending. In both dot-com and AI, investors are highly speculative as to the future revenue around the potential of the technology. It is within human nature to celebrate our innovation, but a little too much in both cases. Additionally, companies are aimlessly developing cool AI products, not knowing whether it will generate revenue. If I'm investing, say, $100,000 into an AI stock, I want to see how the AI will generate revenue for the company, how much, and when. None of these questions matter to a lot of the greedy investors when the buzzword continues to make these stock prices soar like the world will be a completely different place when we wake up tomorrow because of AI. Another similarity is that investors in both cases assume that people do not prefer real-world personal experience over a virtual, online, or AI-generated experience. That was the biggest weakness in the early dot-com narrative, where they thought people wouldn't want to see products in person before they purchased it. Today, companies are looking to replace human intelligence with AI to provide a more of an efficient solution for services. But this also assumes that AI can provide an equivalent experience in areas like customer service and other services where human discretion and decision is still very important. As of now, AI is very good at regurgitating data, but it still can't think for itself, and I think that's a long ways ahead. So there's still a lot of limitation in the quality of services that it can provide to people. On the flip side of the things, there's a big difference between the dot-com bubble and the AI. The biggest difference is that AI is already generating intelligence and efficiency to its users today. Dot-com was more of a pipe dream during 2000 and prior, where no one was actually ordering things online. So in that sense, AI is different in a sense that it's actually being utilized today and is providing some value. Areas where AI is providing value include increased productivity through efficient data management, query and interpretation, advanced graphics, gaming, machine learning, content automation, and chatbots. I have seen videos of fake human characters generated by AI, and it was so realistic I couldn't even tell it was fake. In other areas though, AI, because it still cannot think for itself, is largely in the business of regurgitating existing data. And the performance of AI largely depends on the quality of data that it feeds into. And depending on the amount and whether the data is bad, AI can still cause inaccurate output to its users. Still, it's a really useful tool and it can increase productivity for many companies. Some really big AI companies have been actually generating AI-related revenues. Looking at Nvidia, the stock price has been rallying like there is no tomorrow, but its earnings have also been going up. Most of the earnings growth came from data center-related products because of corporate enthusiasm for AI. Their clients have been buying up all these Nvidia products to get their own AI models moving. Nvidia's AI components that are in high demand are in areas of high-performance computing such as Grace Hopper superchips, which is an accelerator chip more powerful than its previous A100 chips and is used in AI and high-performance computing environment utilizing advanced servers and supercomputers. Its GPU and gaming component of the sale has also been pretty consistent. Now here's the caveat. The AI component of their sales came from companies investing in AI, as there was a big hype in everything AI in the market. Every company executive basically has been asking how their company can use the AI to increase productivity and cut costs, and a lot of startup companies are also developing AI solutions themselves. The biggest risk is when the AI tide goes out, and the AI fails to realize real earnings or cost cutting for most companies. This demand for AI tools will eventually go down. A lot of these AI startups could easily go under or no longer invest in AI if it's not profitable. Then the demand for Nvidia products will naturally go down. Nvidia is an incidental beneficiary of this huge AI boom, but we gotta be really careful here, because this boom may not last. AI needs to create earnings. Nvidia is kind of like Levi's company selling jeans during the gold rush, where they profited from gold miners by selling what they needed. Nvidia has sold a lot of jeans so far, but what if most of these miners never actually find any gold? One pair of jeans is all they're gonna buy before they quit. Additionally, the GPU sales are highly cyclical to the economy, and in 2009, its sales suffered a lot because of recession. And we may also see a recession soon, and if so, then Nvidia's sale could suffer in both of their major revenue sources. Google, Microsoft, and Amazon are now developing AI cloud systems where AI startup companies are a lot of their clients. Microsoft partnered up with OpenAI to develop Azure OpenAI, where you can experience the ChatGPT experience using your own data. These are probably amazing tools to increase enterprise efficiency for companies. But the biggest risk is that all this is nothing more than a glorified internal search engine, and while it's really cool, if the cost does not justify increased productivity, companies' demand for these tools will decrease once the AI hype fades. Still, these are amazing companies, but the expectation for AI and its latest stock price action is still very overblown. Generative AI is also facing some issues as the data is getting way too big and filled with bad data, and naturally its output quality is also affected. There's also been a lot of copyright lawsuits against the companies of these AI as they exploit copyrighted information that belong to other people. Overall, I still believe in the AI, and I believe AI will transform our lives dramatically in the next 5 to 10 years. I think it's still at a very early phase where there's way too much exuberance around the idea without a concrete path for consumer demand and revenue. With a likely recession in 2024, a lot of the investments will dry up and many of these AI startup companies will probably go under, which will then lower the demand for these AI products and services created by these big Magnificent Seven companies. And even without a recession, the AI play has been way too speculative. AI technology will continue, but there's a big time gap between the early phase of the development and the wide adaptation where real revenue is generated. The longer that gap is, more likely the initial pop in the market valuation will fade. As for the AI stocks, particularly the Magnificent Seven stocks, this will create a significant headwind in the next 2 years as the AI hype fades and their corporate clients' AI development demand falters. For that reason, I think it's similar to the 2000 dot-com play, where the valuation is still unreasonably stretched around the hype. However, once the AI bubble unwinds, it will create an attractive investment opportunity for investors because I still believe in the long term, the AI is here to stay and it will transform our lives one way or another beyond these automated content generation and chatbots into something that's way more meaningful that will help everyday people. Well, that's it for today's video. I hope you enjoyed today's content, and if you did, please hit that like button below and subscribe, and I'll be sure to provide more content like this every week. Thanks for watching.